the Power Lunch studio in Johannesburg from Vestact is Sasha Naryshkine. Sasha, let's go back to Friday if we can, because that was an amazing thing. There I was driving home, battling the traffic, thinking to myself, yeah, okay, everything's fine. Then suddenly the rand got absolutely smacked.
What, there's traffic in Cape Town, Lindsay?
Yeah, a lot of cyclists down here apparently, and well, let's not talk about that. But yes, the rand, please.
So obviously it's the dollar index, which has ramped up significantly from about the middle of last year, and that's coincided with a drawdown in all commodities prices. So whilst that's been helpful, and Sasol suggests that it's going to continue to be helpful, the low commodity prices obviously is not helpful for all the commodity producers. But if you go a little bit more global in terms of what the currency outlook has looked for some of our peers in like the BRICS mix, if you want to call it that, the hardest hit are Brazil and Russia, obviously for different reasons. Obviously India has done some things right, and in fact that could boost the next, could be the next commodities boom there if they attract more investment, if they start growing quicker, if there's a big concerted effort by the government for bigger infrastructural spend, and gosh, they certainly need it. So I guess that's the next thing to watch in all of this in terms of the commodity space, is whether or not, because it certainly looks like China is consuming less and less. There are some pretty ugly numbers coming out. And in terms of oil, and I guess we're going to talk about Sasol soon, there's even starting to become a market in storage even. So it kind of gives you an indication that whilst rig counts are falling, people are starting to store more and more oil. So and also Goldman Sachs has changed their projection, maybe saying $40 a barrel is too low. So your guess is probably as good as mine.
Yeah, my guess is that when it goes from 115 to 45, back up to 65 and back down to 59 now, the fact is that this is going to take a long time to find its new equilibrium. They're talking about storage, people are talking about these giant tankers, these ultra-large crude carriers, ULCCs, being stored across all sorts of different continents. What about Sasol, though? The Sasol story is an interesting one. We know about the dividend, we know about the fact that the oil price has fallen, but they must be looking at themselves today and saying, we've really been saved by a rand that is now 12.03, 12.04.
Yeah, not just that. I think, not enough credit is given to Sasol management, which are probably very conservative, and that's against the backdrop of the independent the independent oil producers in mainland US really going hard. And they're starting to come unstuck. So whilst the massive fall in the Sasol share price is unsettling, credit must be given to management. So they're going to control the things that they can. So they're going to pull in their horns and say, okay, we can control costs as best as we can, and then we're like everybody else, like every other oil producer or any company related to the oil price, we're directly correlated with that. So obviously, if you have a look at it from an operational point of view, probably down about a quarter. So the question then you've got to ask yourself is, you've got to say, well, how much has the weaker rand saved them? I mean, we're at 12 here, and in the period for the 6 months, they were at what, 10.99, which was 9% weaker. So there's probably another 9-10% in it. In terms of where we are currently, and obviously if the oil price is going to settle a little bit higher, but I think people mustn't work too far ahead, because notoriously, if you'd asked anybody a year ago if they thought the price of oil would be $60 a barrel, they probably would have said, no, you're nuts, it's probably going to be between 90 and 110. So predicting where the oil market is going to go next is a tricky job at best.
And that's why the people at the investment banks don't justify their seven-figure salaries in US dollar terms, because they don't know anything more than you and I do. What about AVI? What about Sasfin? Sasfin's a bank that interests me. I mean, we have people from Sasfin on CNBC Africa go quite regularly, but it goes about its business and it increases its operating profit by 13% and that sort of thing. Its results came out today. So perhaps before AVI, talk about Sasfin.
I think the limited liquidity is a bit of an issue, because if you have a look at the chart, as you pulled it up there earlier, you can see that it doesn't trade as much as you would like. So probably because it's very tightly held. But I think on balance, they do a great job there. I guess it depends how you view the middle business sector in South Africa, who are probably running into a pretty tough time. But they do lots of inventive thinking there. They've got a pretty good asset management portion there too. So, if you had to compare it, it probably doesn't have a peer in the local market, simply because of the business that they do, and pretty good at doing, and they've delivered strong returns. But so is the rest of the banking sector, to be perfectly honest, in terms of share price performance and also on a relative yield basis.
Okay, let's talk about AVI now before we go to the break. A strong brand portfolio, it says here, underpinned a sound performance in a challenging trading environment. Every single company I speak to says it's very challenging in South Africa, and it really says something about South African companies, that during a challenging environment they can do quite well, because their revenue was up 11%, their operating profit up 13% to 1.15 billion. I've always been worried about this company because it's so diversified, but I think diversification is the key here.
Yeah, exactly. So everything from tea and biscuits through to fish and even footwear now. I noticed your favourite shoes there, Lindsay, Green Cross, didn't do too well, did they? No, I mean, jokes aside, you've got to ask yourself the question, trading on a 20 multiple, obviously the strong dividend underpin is going to keep them at these elevated levels. But where is the growth going to come from? So is an 11 to 12% increase in profits, does that justify a 20 multiple? Well, I think they do have growth markets. So if the Mozambican economy clicks, for instance, or the Malawian economy clicks, or even Zambia, they have the ability to be able to sell into a strong growing middle class their quality products. So i.e. the local products, which you would think are of a slightly inferior quality, whereas AVI's products, especially in the kind of the food space, certainly compare at an international level. So, and they're good value for money. So if you're optimistic about the growth of Southern Africa, then I think it's a really good entry point. Plus also they're a very aggressive dividend payer and have announced that they're going to be paying the special dividend as well. So any sort of excess cash that they sit with, either they'll decide to buy back the shares if they look slightly cheaper, or they'll send that back to their shareholders. So it's been a really, really good investment for longer term shareholders over a period of a decade plus. People have done exceptionally well out of this one, and it probably justifies, like I said, that higher multiple because of the dividend underpin in a lower interest rate environment.
Just a quick one, but of course a quick one doesn't really do justice to the company I'm about to talk about. It's called SABMillier. It says here, SABMillier sees more affordable beer and middle class aspirations as the biggest growth opportunities in Africa. So on the one hand it says cheap beer, on the other hand it says expensive beer. They've got the best of both worlds, apparently, because it's, let's face it, a monopoly.
Well, I remember as a youngster living in Mozambique, and just at beer drinking age, I had an Impala. Now, as far as I understand it, an Impala is now cassava beer. Is that right? I don't know if it was back then. Yes. I think it was made in the same brewery as Deutsche M and Laurentina. But I think a bit of a strange announcement, and a few strange ones with regards to, I mean, you'll recall their CFO high-profile departure. I'm not too sure how the shift from a South African company to a more kind of British culture, and whether or not that's a positive or a negative. Remember that they're trading on a very, very demanding multiple. But I think if you're sitting in London, Lindsay, and you ask yourself, where is a consumer stock that I can get middle class and get instant diversification globally? I think SABMillier is definitely ticks all the boxes from that point of view, which is why they trade at the higher multiple relative to some other consumer stocks. And it's been robust and management has delivered. The question remains, with the transition in management away from the typical South African conservative style to a more English style, I'm not too sure how that's all going to stack up.
No, not right. If you walk around about 250 metres away from these studios, Sasha, you'll find a place called Vasco da Gama, which is one of the oldest Portuguese places in Cape Town, and you can still go to Laurentina, but goodness me, they charge through the nose for it. It's around about 45, 50, even maybe 60 rand per bottle. Thanks so much for joining us this lunchtime. That's Sasha Naryshkine from Vestact.